Hey guys, welcome back. Today we're talking about real estate investing. Where do you start if you're new to investing in real estate? I'm Jeb Smith, Coldwell Banker Residential Brokerage here in Huntington Beach, and I appreciate you taking the time to watch. Do me a favor, if you're new to the channel, hit the subscribe button. As you probably know, my goal here is to help educate you as a buyer, seller, or investor, with regards to real estate. So thank you again for taking the time to watch, and let's get to it. So the question is, where do you start if you're looking to invest in real estate? This is a question I get quite a bit, in fact, and a lot of times it comes from people who are, new to real estate in general. There's a lot of millennials out there. No offense to millennials, it's not a dig on millennials, but a lot of millennials are out there seeing other people invest in real estate. It's the quickest way to essentially grow your net worth over time. And, it's a hot topic. It's one of those things that everybody wants to get into. So we're going to talk about it in some detail here to help kind of guide you in the right direction if you're new to investing. And so where I would start with this is, if you're considering investing in real estate, make sure that you're in a position to actually use that money towards buying a house, right? You don't want to be financially strapped using every dollar that you have to buy a piece of property, right? That's not setting yourself up for success in the long run, because with investment property, you could have potential months where you don't have a renter. You have months where, in between renters that you're getting the property ready, you've got to paint and do new flooring or whatever after a renter's been there for some period of time, that sort of thing. So there's always money, there's things that might need to be fixed. If you're having a property manager, you've got to be able to pay that property manager. So investing in real estate isn't as easy as just buying a piece of property and, money comes in every single month and all is good and the property goes up in value over time, and then you get to sell it and buy something else. That is how we like to think of investing in real estate, but the reality is that there's a lot of things in real estate with investing that you don't think about, right? Like I mentioned, the property being vacant for any extended period of time, repairs on the property, those things that come up. So before you start investing in real estate, make sure you have expendable cash to do the things that I'm talking about here, to be able to float the property for, a period of time if it isn't rented or if things come up or what have you, right? So that's something to think about initially. The second, and this is the most important thing, and all of this, keep in mind, comes from a mentor of mine, Brian Buffini, who has over the years kind of ingrained this stuff in my head, and I want to pass it along to you. And that's, if you're considering investing in real estate, there's two paths to think of, if you will. One is a path of buying a property for the monthly cash flow. The second is buying a property for appreciation. So when you're considering buying a piece of real estate, you should consider one or the other. It's very hard to get a property to do both. So you should either be thinking from a cash flow standpoint or an appreciation standpoint. And what I mean by that is, in California, right now in Southern California, it's very difficult to find a single family residence, if you will, in say the area that I'm located, where you can put 25% down and rent it out and you'll have a positive monthly cash flow. It's just very difficult based on where prices have gone. It's difficult to have positive cash flow. But what's happened in California over the last 10 years and each year almost, progressively over the last couple of years, is that properties have appreciated somewhere between like 3 and 5% almost every year for the last, 10 years. It's crazy. I mean, even some years more than that. So California is very much an appreciation state. Whereas you take some states out, like for example, Las Vegas or Fort Wayne, Indiana, or Bend, Oregon, or some of these states that properties are less expensive, but they have huge rental demand based on things that are going on in the local economy. Like, they have big corporations moving there and people renting, and therefore the properties are, for one, a little more affordable to start with, right? So they're less expensive than California. So you can buy a property for, say, half of what you can in California, and your monthly rents actually cover your mortgage, your taxes, your insurance on a monthly basis. So you're actually receiving positive cash flow on that investment. So those are really two types of of investments when buying real estate. And so a lot of people want both, right? I want the cash flow, I want the appreciation, when in reality that's very, very difficult to do outside of doing Airbnb, VRBO, like the weekly rentals, the nightly rentals, that sort of thing. That changes the whole paradigm on investing. And what I will say about that, I'm not going to go into in great detail about short-term rentals, but the thing to keep in mind about short-term rentals is, if an association, if a community, if a city, whatever, puts restrictions on those VRBOs or those nightly, those weekly, nightly rentals or what have you, that could change the whole game on that particular property. So a lot of people are buying property just for that purpose, which is great because they're making a lot of money in California on a monthly basis, and they're getting the appreciation. So they're getting the cash flow and the appreciation. But if something changes within that market where they don't allow that anymore, they don't grandfather it in, that you could be in a property now that you've paid way more money for that on a monthly basis just doesn't make sense. So if you're considering buying a property for the sole purpose of doing VRBO or weekly rentals or what have you, keep in mind that things could change. Just make sure you're exhausting all your resources and thinking about all the possibilities before you go down that road, because there are a lot of opportunities out of state in different markets where you can invest in property for a lot less than you can in California, get a monthly cash flow, and you're getting appreciation. You're just not getting the appreciation that you are in California, right? A lot of these markets, Coeur d'Alene, Boise, they've seen great appreciation over the last couple of years because there's so many people moving out of California into these areas, and you're getting the cash flow on a monthly basis based on where you bought the property and what you can rent it for. But keep in mind that appreciation isn't going to continue for the long run, right? It's getting it now because these markets are new to a lot of people, and there's a lot of people kind of flooding those markets. But long term, you've got to think of it on one versus the other, right? And so if you are considering buying something for appreciation or cash flow or what have you, again, this kind of goes back to my initial point, is make sure you have the money for a down payment. Don't, a lot of people want to buy it with the least amount down, which is great. I mean, I get leveraging your money, but, also keep in mind as the market turns, right? We're not there yet, but at some point the market is going to pull back a little bit. And if the market pulls back 25%, if you put the least amount down on some of these properties, are you, mentally, are you still okay if you're upside down on the equity of that property? So I would say in any investment that you're considering, put at least 25% down if you can, because if the market pulls back 15-20%, at least you're still positive on what you owe versus what it's worth. And if you had to sell it, you're not in a position where you had to do a short sell or something like that, right? Because I can tell you from experience, I owned investment property and I leveraged myself in that market. And when the market pulled back, I owned property that was, vacant for a period of time, and then I was upside down on the equity, and it was a bad feeling. And I ended up having to short sell those properties. Now this was 2008, 2009-ish, somewhere in that game. So I've been through that, and that's why I can speak from experience on this. Is try not to leverage yourself to the point where if the market does pull back, that you're not in a position to be safe if for whatever reason you had to sell the property, or you've got reserves on the side to be able to float that property until it gets rented or until you get it in a position to do whatever it is that you need to do, right? So again, the quick notes are here. There's a lot you can talk about in investing property, but I feel like this is a good start for a lot of people, and I'm going to do more videos on investing. But if you're considering doing an investment property, make sure you have somewhere 20-25% down. That's what most lenders are going to require anyhow for a down payment. But also start thinking, are you in it for appreciation or are you in it for cash flow? The long-term game, if you can get monthly cash flow and it's positive every month and you're paying down that mortgage, in time you're going to have a lot of real estate, right? If you have multiple properties, you're going to have properties that you own free and clear. While they may not be appreciated like they would in, say, California, you're going to have a property that you own free and clear. That's an investment. That's a retirement piece. And at some point you could use that property. You could sell it, do a 1031 tax exchange and buy another property. So there's opportunities there with doing cash flow, but everyone wants the quick, buy a property for $100,000 and it's worth $200,000 in a year or 2 years. That's not the reality. It's not how most markets work. It has happened in some of our markets, but it's not normal. So anyhow, I hope that's helpful for anybody thinking about real estate, kind of separating the two and thinking about what is more of your mindset and trying to grow your wealth over time, right? Is it appreciation or is it cash flow? But anyhow, I appreciate you taking the time to watch. Do me a favor. If you have questions, comment below. If you have comments, comment below. But if not, feel free to reach out to me directly. Would love the opportunity to help. And thanks again for taking the time. See you again soon. Bye-bye.